And it looks like the bloodbath continues. It's Tuesday afternoon right now and markets are looking rough yet again, second day in a row. And as I said to you guys, I would keep you updated. So let's do a quick market review, figure out what's happening, update the thesis, talk about coronavirus a little bit. And of course we got Alex from Macaros to help us. Every day I just ask him what's happening, what's going on, what's happening with the market. And then he tells me and then I tell you guys. I'm kidding, that's not exactly how it works, but kind of. And before we get into it, just remember Strategy Builder Pro is open right now. This teaches you how to build a strategy from scratch and also how to improve whatever strategy you may have right now. And the big thing about this is risk management. I mean, look at this market, it's rough. And this is when the amateurs get separated from the pros because the pros are all managing their risk. We actually get excited for times like this because if you're managing your investments correctly, you don't even think of yourself as an investment manager. You think of yourself as a risk manager. And this is where all that risk management comes into play. And I told you guys before with this massive run up, everybody was texting me like, oh, I'm so good at trading stocks. Look at me, AK. And now after these 2 days, they've all grown silent, which I'm not trying to bash them or anything. I mean, it's my own friends and family, but I know there was likely no real strategy in place because it's like they say, a rising tide lifts all boats, but when the tide goes out, you see who's wearing pants. Did I just combine two different quotes? Probably. And am I wearing pants right now? No, not at all. I'm completely naked in my kitchen, which is why there's no video of me right now, violating every health code. But what I mean to say is that when the tide goes out, you see that the risk managers are wearing their pants while the rest of the people aren't. So anyway, get your risk management in place. This training program will help you. And I mean, what's going on here? Every time I start talking about the market, it just keeps dropping. But okay, let's see what's going on. So if you've been watching these videos, these market review videos, you know, we've talked about this. We said this was going to happen. Alex said decade high valuations, overzealous sentiment positioning. All the people texting me and all the graphs I've shown you. And stretch technicals made a move like this inevitable. But this whole coronavirus thing, that's been the big catalyst that's just put fuel on the fire. And I know previously in a few videos ago, maybe it was a few weeks ago, I said coronavirus wasn't a huge factor for the market. Well, that's kind of changing now and we'll talk about it. So this week is the final trading week of February. And as I mentioned before, we like to look at monthly candles. So that monthly candle is going to print at the end of this week. So as Alex says here, if this week ends near the monthly lows or lower than the previous bar, that's a major sell signal. So that puts the odds on further downside over the next few months. So a major target for the downside would be a retest of the November breakout, which is 8% lower from here. And as of this recording, it's probably not 8%, it's like 5 because the market dropped so much already. So if we look at the daily action right here, the market formed 3 large surprise bear bars, 1, 2, 3. That means more follow through to the downside. And you can see this is all slightly dated because the market is moving so fast. So this little up bar right here, that's this terrible red candle right here. And it sucks. I wish I could get you guys this information immediately, but there's always a 1-day lag. But thankfully the information is still valid. So this Bollinger Band support that Alex is talking about, it's sliced through there. So he was thinking that we would get another pop and then a drop, but it's looking like we're just getting the drop. That's not to say that we won't get a pop from here though. You can't exactly time these things. This is usually just the standard movement though of markets. So how are we going to know if a bottom is in? Well, we got to look for that fear and capitulation. So we've been in this long buying climax, right? 4 months where a ton of crowded positioning was built up and a lot of that positioning now needs to be unwound. So it's going to take some time and volatility. So you can look at the 20-day moving average of the put to call ratio, and that fell to its 3rd lowest point in 5 years. So we need that to raise back up again. And once it does, then we could see that it's, you know, closer to a bottom and it needs to be above 1. And the put to call ratio again is how many puts versus calls in the market. And more puts is good because that means more people are bearish and it's again a contraindicator. When we talk about sentiment, bearishness is a good thing for the market. It means there's more people on the sidelines to come in. If everyone's super bullish, then that means we're hitting, you know, near a top, which is exactly what just happened. So other things that we look for to mark a bottom is the percent of stocks trading above their 20-day moving average, which is the top left right here. We want that to go to this green level. So we want less stocks trading above their 20-day. That'll give us a good signal because it means, you know, more stocks are lower, the bottom is forming. And then on the same chart, except with a 50-day moving average right here on the right, if we can hit that green, that's great again. That'll really mark the bottom. And these are just breadth indicators, right? They give you a sense of how the overall market is acting. And then this thrust indicator right here, if this reaches this green line, that's another great indicator of a bottom. So as you can see from all of these, we aren't there yet. Now in the last video, I was telling you that I actually added to my positions because VIX was above 20. You know, it was almost at 25. Well, because the market dropped even more, VIX is now at 28, almost 29. So did I lose on the money I added? Yes, I did. But like I said in that video, you know, I was prepared for that. So for example, with AMD, I added right here. And today, AMD actually went below my risk point. So I added money here and immediately exited my entire position here. But I'm okay with that because again, risk control, that's what it's there for. And look at this run in AMD. I've been in it since December right here. So I had a nice run. And from December December till this high right here in February, I hit multiple profit targets and I was taking money off the entire way because I was doing that in preparation for a potential drop like the one we just had. And then as I was taking profits, I also moved up my risk point. So this risk point is higher than where I even got into the stock, obviously, because it's moved up, and that's to prevent round trippers. So that just triggered today and I exited. And did I lose money on adding right here? Yeah, but my overall P&L from this AMD, now that I'm completely out, is very positive. I made a bunch of money on it. And I'm not saying this just to brag to you. I'm just saying this is the benefit of having all those things in your strategy. Profit taking, risk levels, position sizing. Those are all the important things. And again, that's what we go over in Strategy Builder Pro. Definitely learn more about it because it closes Sunday. There's a link down below in the description and comments because you need that in times like this. And another example in one of my holdings is Tesla. And Tesla I was covering because it was a good example of taking profits. So I took profits all the way along here. So by the time we got to this area, I only had 25% of my position left. And it's during those times where you feel like kicking yourself. You're like, damn, if I had the whole thing on there, then I would have made a bunch more money. And yeah, that's true, but you're gonna be real happy when you took profits when you see a market like this that's collapsing. And by the way, Tesla, the way it continues to hold up, that's just bullish signal after bullish signal. So I did add some money to Tesla as well the other day, and we'll see what happens. So I won't be adding any more money because I'm not making like an addition to my account. But if I was a discretionary trader, I'd be watching this real closely. Because again, when the previous videos we were talking about, Tesla broke out of this little consolidation right here, very strong signal, and now it's holding up relatively well. If Tesla was weak, when you see the NASDAQ falling like it is, Tesla should be getting crushed, but it's not. It's holding up real strong. So that just, the strong hands are still in play. Not even retail is getting scared out of it. So I would definitely keep an eye on Tesla. It's very bullish. Okay, coronavirus update. This thing has been tough to contain. We got clusters of it in China, South Korea, Japan, Italy, and Iran. The number of cases are over 80,000 now. And the problem with this virus is that there's an extended time between when you get infected and when you show symptoms. So if that's the case, then you know it has a good chance of being a widespread pandemic because you're going to be spreading it before you even know you have it. So we don't know how bad things will get, but we do know that by this point, there have been critical supply chain disruptions, and those are going to affect the market going into the end of the year. So Nassim Taleb had a tweet about it. He said, doctors in the World Health Organization don't understand multiplication. They understand medicine and addition, but not multiplication. When we posted on January 26th, there were 1,000 casualties. Today, there's almost 79,000. So unless we overreact at this rate in 1 month, we're going to see huge numbers. So we have to overreact if we want a chance of containing this virus. So that means doing what China does with wide-scale lockdowns and quarantines in cluster areas. Man, this is really rough. So doing this is going to have dire short-term economic impacts. But the alternative of only doing half measures in order to minimize that economic disruption, well, that's just going to be greater pain down the road. So Tim Dye, who's the economist, you know, he does the Fed Watch stuff. He talks about the catch-22 that we're in. He said the extended and rolling nature of containment efforts appears to be the greatest concern of market participants because everyone's scared about what's going to happen to the economy with these containment efforts. And just remember what we said, the conditions were already ripe for a market correction. So this coronavirus isn't the cause of it, but it is the catalyst. And that's how you got to think about macro and markets. It's like if the conditions are that a boulder is sitting on top of a hill, does it really matter what pushes the boulder down the hill? Could be a storm, an earthquake, just a person. Whatever it is, it's just a catalyst because the conditions, a big boulder on a hill, were already there. So when it starts rolling down that hill, you're going to be like, oh yeah, obviously. But it'll only be obvious if you know the conditions. That's why we do these macro reviews. But back to what Tim Dye is saying is that there's only so long authorities can hold a global economy hostage for a virus that can't be contained and potentially has a fairly low death rate. So at some point, the focus is going to shift from containment to mitigation, and supply chains are going to come back to life and the inventory correction will begin. But if containment is still possible and it takes longer than expected, then the V recovery that we should see will become a U recovery. So the longer it takes to shift from containment to mitigation, the wider the U becomes and the higher chances that we shift into a recession. So as Alex says, as traders and investors, we can't really do anything except ruthlessly manage our risk and cap our downside because no one knows what's actually going to happen with the coronavirus. We just got to play what's in front of us. And I told you in that last video, we were saying that it shouldn't be a huge deal, but it's becoming a bigger and bigger deal. So you got to stay fallible and switch what you're doing on that. You got to update your probabilities, which is exactly what Alex says here. The probability of one of the future outcomes has widened dramatically because of what's happening with coronavirus. And for me personally, with my system and my strategy, you know, I was showing you examples of Tesla and AMD. Nothing changes. The risk management is there and I'm following it. And I'm looking forward to a correction, because when the stock market is rising like this, just everyone's doing amazing, which is good. Yes, of course. I'm glad everyone's wealth grows, but then people start forgetting the benefits of a good system and strategy, why you have that risk management in place in the first place. It's real easy to forget when things are good, but then you wish you had it when the times get bad, because that separates, again, the amateurs from the pros. So get your strategy right with Strategy Builder Pro. I'm a little sick over here, and I think I might have just promoted this thing 3 times in one video. Might be a little too much, but hey, it's important. And there's no better example of why it's important than the market right now. So it's only open till Sunday. Check it out. Link down below in the description and comments. Make sure you are managing your risk the right way. All right, that's it. Any questions, comment down below, like this video, and subscribe, because like I said, we're gonna keep updating you on this as I get more information. And if you want to see those videos, hit that notification bell so you get an email notification as soon as they come out. So I will talk to you again soon. Stay fallible out there. Bye.